Jim Cramer discusses his market game plan for the upcoming week. He notes that the People's Republic of China will release important economic data, which could bring impact to global markets, and that this upcoming CPI report may show a weaker number, potentially leading to a market surge. Jim also touches on several key earnings reports, including Home Depot, Alibaba, and others, and provides his thoughts on their potential performances. Additionally, Jim discusses the impact of the Federal Reserve officials' comments on the economy and the potential for rate cuts in the future.
People to dump stocks and sends bond yields higher. I know it makes it so that everything's very unsteady, and that in turn keeps people off base. Not unlike what Neil Kashkari, the Minneapolis Fed president, who's bearish today and made people feel gloomier and more circumspect, did. I mean, this is the game. Or this is the drama, I should say. See, the sellers are allegedly fretting about the Fed's so-called timeline, whether there'll be one cut, no cut, two cut. These Fed heads make you feel like we are never going to cut rates, so the audience each time is stunned. But the real story is that the loudmouth Fed officials make everyone confused, cautious, worried, and at times just plain scared, which by itself causes the economy to slow down. That's the goal. See, the slowdown then becomes self-fulfilling, causing a rollback in prices everywhere. Hey, maybe from Home Depot, which reports next week, to McDonald's, where we're hearing about talk about a fabulous, cheaper rollback hamburger. See, the more these Fed officials entertain us with their hawkish commentary, as long as they keep us on the edge of their seats, well, the more likely it is that the Fed can cut rates in the not-too-distant future. The twist of the drama is that the more we hear from these hawkish officials, the worse the economy gets. And eventually we all win because the Fed needs a soft economy before it can cut. The old days they used to call, before Netflix, they used to call it jawboning. It's okay, but don't be fooled. You know what? Maybe we're in the prequel right now. Maybe that's what's happening with 8 straight updates for the Dow. These Fed officials either know the data's been weakening for a month now, the so-called brown shoots that I talk about, and they want it to get even weaker, or they haven't been paying attention and still believe the economy's going strong. Sadly, some of these officials don't do a lot of homework. Maybe they don't have the staff. I don't know. Maybe they're too theoretical. Maybe they lack context and contacts. All I know, thank heavens, is that the chairman, Jay Powell, is the opposite. He's not part of the drama. He's the real deal, not fictional. Thank heavens. And he does do his job. But no matter what, the Loretta Mesters need to keep up the good, scary, frightening work. Even though I think she's wrong, dead wrong, her comments alone do help fight inflation by frightening the heck out of business, which is always worried it'll be caught with too much inventory and not enough buyers. Hey, speak of the devil, Home Depot reports on Tuesday. And I really hope that they announce some rollbacks. Home Depot needs to play the role that we really want them to do for the American consumer. It needs to use its marketing power, its store power, to tell suppliers enough already. If you want to sell into our stores, you cut prices. And just tell us who's doing that so we can go buy their stuff. If the despot did that instead of just talking about the $18 billion acquisition of SRS Distribution, which I think they paid a fortune for, that's a Builder's First Source competitor. You know we like Builder's First Source. They'd make headlines and potentially do more business because American people want champions in the fight against inflation more than anything else right now. Or if you're more of a glass half empty guy, Americans have gotten cheaper. So we'll bring our business anywhere we can get a bargain. Alibaba also reports Tuesday, and we'll be watching because the People's Republic of China needs to show that as an internal combustion engine rather than just a whole economy built around exports, like it's cheap electric vehicles that are destroying nascent domestic EVs around the globe. Alibaba is a tremendous internet company. Really my favorite, by the way, Chinese company there is, with the exception of maybe Zeekr, Z-E-K-R. That's a Chinese electric vehicle company that came public today and has some incredible cars and trucks. If Alibaba has a great number, I expect it'll be greeted with a lot of talk about how it's finally okay to buy Chinese stocks, because analysts can't resist doing that and they want the business. After the close, we hear from a company called Nextracker. We've had them on. It's a very cool solar technology company that makes solar power more of an all-day, all-year business. If we can put up a good number here, we're counting on CEO Dan Sugar to deliver it. You know why? Because Sugar is the delivery man. As you know, as you need to know, Wednesday, all you need to know right here, 8:30, CPI. Now, we often hear that the Fed's preferred inflation gauge is the personal consumption expenditures. They call it the PCE, you know. But the CPI is the most visible reading, and we've had 3 hot ones in a row, which did a lot of damage to the market. Rent's been bad, insurance been bad, auto's not so great. This time, I think we're going to get a weaker CPI number. Now, here's where the Netflix drama comes in again, because the Fed heads are pretty much universal in stated worries about this particular number. They think this is going to come in hot. I think a weaker CPI will make skeptics understand why the market has been going higher for the last couple of weeks. And that should lead to a burst higher at the opening. Then the market will be really overbought, and then will probably go down. That's why it's been so great going in. Once we get the number about why it's been going in, there is a sell-off. Now, after the close Wednesday, not a bad one, don't worry. After the close Wednesday, Cisco reports, and that's the CSCO kind. And it'll be awkward if they can't give us a positive forecast, because they can talk about the momentum of Splunk. That's a data mining company that we like so much that it just acquired. I hope CEO Chuck Robbins talks up his relationship with NVIDIA and how even though NVIDIA has a competing product, it still partners with Cisco. Hey, did you see the Arista Net? How cool that was today? Told you that was a good one. Now, we had talked to them yesterday if you missed the show. Now, if you want to know who could blow up its stock by calling for national every aisle rollbacks in price, well, it's one of my long-term favorites. It's Walmart. Now, Walmart reports on Thursday, and I honestly, I wouldn't put it past them to do exactly what I said. Now, I love these guys. Planning to go this weekend to Walmart with my kids because it's so darn fun. We go to a different one each time. Can you believe that we actually do this? And Walmart can already take credit for having lower prices. Remember my thesis. The Netflix drama gets resolved by the Fed chief ultimately needing to cut rates and being able to do it with credibility because of outfits like Walmart making it for a deflationary environment. Next, Deere stock is up, and its stock looks cheap, but I just don't know if it matters, given the fact that buyers can't resist owning an industrial with a good brand name. I know it's counterintuitive, but that's what happens when we're at this stage of the business cycle, the stage where you know anything machinery is about to run. I don't want to be in farm equipment, though. Remember, we spoke with the CEO of AGCO, a competitor, and he made me feel queasy about the whole group. I'm probably in the minority here, though. Now, finally, Applied Materials, the semiconductor capital equipment company, reports after the close Thursday. This morning, Taiwan Semi, that's the gigantic outsourced chip maker that's based in Taiwan, had some very good things to say. So Applied Materials, which makes machinery that goes into Taiwan Semi, could have a whiz-bang of a quarter. No wonder the stock, which is terrific, gained $3.40 today. The company's solid. The sector's great. You could do a lot worse than owning a stock of AMAT. Now, we also have two incredibly important analyst meetings thrown by Dow and Cracker Barrel. Now, I think Dow's doing extraordinarily. See that stock this week with the run it has? It's still got a good yield. They're doing extraordinarily well considering the weakness in the material stocks and in some of their grades of plastic. The combination of the dividend and the capital appreciation stream is hard to beat. But speaking of dividends, we're going to be watching the stock of Cracker Barrel to see if it cuts its very large payout. If it does, I know, again, counterintuitive, but you should buy the stock because that dividend cut is widely expected to happen. Friday, you know what? We have very little market news, unless somehow you think that my daughter Emma's 30th birthday is a factor. I know it'll be for me. But the bottom line, maybe we can see the end of the Netflix drama as it becomes obvious that there are more brown shoots than green shoots in the economy, and sooner or later the Fed's next move will be to cut rates. Seen the movie. It's a good one. Let's go to George in Missouri. George.
Jim, you featured the stock several months ago, and I bought a substantial number of shares, but the price of the stock has been basically flat. What is your prognosis for Honeywell?
I'm so glad you asked me. See, the stock went over 200 today. I was so glad. This is a very big stock for my charitable trust. And candidly, I've been very disappointed like you. I think they have a lot of things. I was hoping they would do an RTX, the way they broke into Otis, remember that, and Carrier. Or maybe they could at least do a GE Aerospace, GE Healthcare, GE Vernova. So far, they've kept the model intact, and it's not working. I'm with you. They need to take action and take action now. Bob in Connecticut. Bob.
Hey, booyah, Cramer.
Booyah, Bob.
Thank you for what you do, Cramer.
Oh, thank you.
My question is about Morgan Stanley. I've owned it for several years, but my position has recently been called away. I want to ask you, should I wait for a pullback and repurchase Morgan Stanley, or should I look elsewhere in the financial sector for a different dividend-paying stock?
Let me put a little spin on it so that we can answer. Then I can answer your question in an effective way. Jeff Marks and I talked about whether we should be selling the stock here. I said maybe we should let some more go. He said, Jim, it yields 3.5% and it's going higher. Let's do this. Let's split the difference. It's at 98. If the stock goes to 95, then I want you to buy. But otherwise, right here, don't buy. Fair enough. As it becomes clear that there are more brown shoots than green shoots in this economy, sooner or later, the Fed's next move will be to do some cutting.